Should doctors invest in mobile home parks? The short answer to this is absolutely yes. In this video, we're gonna break down what mobile home parks are, what are the advantages and disadvantages of investing in it, and why it makes total sense for the doctor to consider diversifying their retirement investment portfolio into mobile home parks. I got a lot to cover in this video, so let's get right into it, guys. All right, guys, welcome back to the channel. In case you haven't met me yet, I'm Dr. Jonathan Witanachi, aka Dr. Johnny Walker. I'm the principal of Walk of Wealth, which is a real estate investment firm dedicated to helping dentists achieve true financial freedom through passive investment in real estate. If you're interested in investing alongside us in high quality real estate deals, go to the description below and click on the link and schedule a call with me or with one of my teammates. Now, anybody that's been following along with us or has even invested alongside us before knows that we're pretty focused and heavy on multifamily real estate. More specifically, large institutional quality multifamily real estate. And why do we like it? We like it because it offers a low risk way to build cash flows and build wealth in a predictable manner. That's why we think that the vast majority of funds allocated to real estate should go into the low risk cash flowing assets like the multifamily real estate. But this video is about mobile home parks. Now, mobile home parks as an investment asset class has really started to gain momentum as something that investors are interested about only in the recent past. Sam Zell has a quote about mobile home parks. You know, he talks about that we're in a nation in crisis for high demand for affordable housing. Warren Buffett has been highly invested in mobile home parks for over 20 years. And he says, we are taking care of a lot of people that would not otherwise have a chance at home ownership, end quote. Mobile home parks are twice as tax efficient as multifamily real estate. And some people argue it gives the best risk-adjusted returns real estate investment period. We've said that about multifamily real estate. Now, there's even some advocates that say that mobile home parks has even more bang for the buck on a risk mitigated basis. Okay, so first, let's define what is a mobile home park. Mobile home parks are also called manufactured home communities, or even trailer parks, which is more of a pejorative term for a lot of people. Now, these are residential communities specifically designed to accommodate mobile homes or manufactured homes. These parks typically consist of individual lots or spaces where residents can lease or own a plot of land to place their mobile home. So the key is that these are manufactured homes. Oftentimes these homes are manufactured off-site and transported to wherever the person wants to live. So a mobile home park is a community, a place where a bunch of manufactured homes are placed in a small area and we develop a mobile home park. All right, so here are some key characteristics of mobile home parks. As I already mentioned, these homes are built off-site in a factory and transported to the park where they're placed on a foundation or blocks. They come in various sizes, designs, and they range from single wide to double wide or even larger units. It all depends on the mobile home park. The infrastructure that comes in a mobile home park community, they're equipped with infrastructure such as roads, utilities, which include electricity, water, sewer, gas, and often amenities like playgrounds, community centers, or recreational areas. Now, when it comes to ownership of mobile home parks, there is some variability. By far, the most common type is where the land is owned by the landlord, and they lease the land to a tenant who then buys and owns the mobile home park. So they own the mobile home park and they lease the land underneath it. Now, again, there's variability because some parks already have the homes in place and they allow tenants to rent them from them. So they literally are renters. And there's other ways that tenants can actually buy and own the mobile home park as well as the land underneath it. Number 4, community regulations. Mobile home parks usually have rules and regulations governing aspects such as the home appearance, maintenance standards, pets, community guidelines, etc. And these regulations are enforced by park management or the homeowners association. Number 5 is affordability. Mobile home parks are considered to be an affordable housing option, especially from low to moderate income families. As we head to worse and worsening times in the country, inflation remains high, making the overall population poorer. So what's happening is that when we have downturns, when we have bad times, when we have decreasing affordability of housing, we see tenants in Class A properties, right? Luxury, top of the line, top amenities, prime location. They start downgrading from Class A to Class B, right? So now we got more pressure, more people competing for Class B housing. So this prices some of the people in Class B housing out. They go to Class C apartments. Again, same thing happens. Now we have an increased amount of people competing for a scarce supply, and a lot of people will go towards mobile home parks or RV parks, mobile home park communities, manufactured home communities. So this is kind of the lowest level, most affordable type of housing. So oftentimes we have low to moderate income families that live in these type of communities. Number 6, last one, for community dynamics. Mobile home parks foster a unique sense of community among the residents, and they often share common areas and amenities that are there for everyone, such as the playgrounds and recreation centers that we spoke about. The community dynamic can vary widely depending on factors such as park size, demographics of residents, and social activities organized within the park. An operator that really is inclined to try to make the tenant resident experience as good as possible, right? High quality of living, etc. They will take the time to develop the community and making it a more desirable place to live for everyone. Now, okay, so now that's all fine and dandy, right? Now we know it's low to moderate. It's stuff that we as doctors would probably never ever want to live in. So why the heck would we want to invest in it? Well, there are some very compelling reasons why. And one of the main things, right? We here at Walk of Wealth, when we look at investments, we don't like risk. We like to bring and mitigate risk as much as possible. We're not chasing the highest returns. We are chasing the highest returns, but with the lowest risk profile possible. So that's why we don't chase a lot of the really risky stuff in the hopes of hitting a home run and getting high returns with high risk. Instead, we like to mitigate risk and still get high returns. One of the ways that we can decrease the chances of losing money and decrease risk is to get into investments that are considered recession resilient or recession proof. Now, this is very important, especially when we're headed for potentially worsening times, potential bad times. And we know that in bad times and in lean times, equities suffer, stock market suffers. And that's why we need to look for investments that are recession resilient. Well, mobile home parks fit that bill to a T. Why is that? Well, number one, mobile home parks are the largest contributor to solving the affordable housing crisis in the United States. Point blank, period. We are almost in crisis mode when it comes to affordable housing in America, right? People are priced out completely from buying homes, and rents have gone up throughout nationwide. I know in the last year or so, rents have kind of slowed down or even come down a little bit, but this is a transient effect. Again, that will be covered in another video why. But the truth of the matter is there are not enough homes, especially affordable housing, in this country. The supply and demand for mobile home parks, on the other hand, is very, very constricted. It's constrained amount of supply. There are only 40,000 mobile home parks in the entire country. So there's a very low supply of this product. A lot of time, there's a lot of reasons why. A lot of communities, counties, states, they don't want these mobile home parks built around their towns and cities because of this NIMBY, right? Not in my backyard. Yeah, you can build it, but not in my backyard, not around here. And so because of this, there aren't that many mobile home parks. So the supply is very low, number one. We already talked about demand. The demand is very high. One of our trusted operators in the mobile home space they say that there's a waiting list for their units. There are 8.5 people, qualified people on the wait list for every spot, right? We have that much competition for every single spot. As soon as it becomes available, there's 9 people waiting to try to get that spot. So tremendous demand, especially depending on the market that you go to. What else makes it low risk? Number 3, it has the lowest loan default percentage amongst all commercial real estate asset classes, right? So the chances of defaulting on the loan or the note are the slimmest in all asset classes. Now, this is very important. And why is this important? That means there's a good chance that you won't lose your investment, right? And Warren Buffett's number 1 rule of investment is conservation of capital, right? Don't lose your money. Well, one of the biggest ways that you can lose money in a passive investment or a syndicated investment is if the property goes under foreclosure. Then you have the possibility of losing your entire investment. Well, this asset class has the lowest default percentage of all commercial real estate. Number 4, manufactured housing as a whole has a 50% lower default rate than multifamily. The other thing is the average turnover rate, right, for tenants leaving a property once they get in is only 5% compared to 30 to 40% in multifamily real estate. If you have a 100-unit multifamily real estate property, chances are 30 or 40 of those people will be moving out, and then hopefully you have the net same amount of people moving in. But the thing is, people move around a lot, especially in multifamily homes. You imagine you rent a 1-bedroom apartment, you get a little bit more money, you get married, you have children, you upgrade to a 2-bedroom, 3-bedroom, you move. But with mobile home parks, on the other hand, the tenants tend to be very sticky. They know how hard it is to get in, and as long as they can get in and they have a very cheap rent, right, which is half of what an apartment would cost, they don't want to lose that spot. And they know that they can't find another option that's the same price as that. And as a result, there tends to be less people leaving and moving. And when we have sticky tenants that stay there and constantly pay rent, that allows predictability of income for the investors, right? So we can make sure that we're going to get our cash flows. Number 6, bonus depreciation for mobile home parks is typically the highest of any commercial real estate asset class. People that have invested with us, they've seen the amount of bonus depreciation and losses you get from multifamily real estate. It can be as low as 35 to 90% we've had in our last handful of deals, which is incredible. But mobile home parks is even more favorable. Number 7, low expense ratios. This is one of the biggest reasons that I love mobile home parks to be included as an asset classes for doctors. There is a strong cash flow component to these. And the reason for that is that we have very high occupancy. We have a lot of people that don't leave and they continue to pay rents, number 1. Number 2, the cost of operating a mobile home park is fractions of what it costs to operate a multifamily real estate property. So an example is 25 to 30% of your gross income will go towards expenses on a mobile home park, on average. Compare that to a well-run multifamily property, you're looking at 45 to 55%. So because of that, they're a lot cheaper to run, more predictable income source, higher cash flow. And what we're looking for when we look for passive investments is we're looking for cash flow, because those cash flows or passive income that comes to us as investors is what allows us to replace our active income and our dependence on being a doctor. So the amount of cash flow is a result of the low expense ratios, or one of the reasons. And as we already mentioned, number 8 is that it's strong recession resistant qualities, the short supply relative to demand. This is very compelling for us as well as doctors. Now, those are kind of the main, text cut and dry, sort of black and white answers. But here's another reason why this is going to be an absolute home run if we invest and do these things right. And this is the main thing. The multifamily real estate space is a very consolidated and mature asset class, right? If you look at what multifamily and the level of sophistication that buyers, operators have with their spreadsheets and data, their software management systems, even local governments' laws and regulations, it's a very mature space. It's very different than it was buying apartment buildings 20 years ago, 25 years ago. Back then, you used to be able to buy at 9 cap rates, 10% cap rates, and you could buy stuff for relatively cheap. Now those same properties, the cap rates have compressed from 9 and 10 all the way down to 6s, 5s, and even 4s. So the values have gone way up. So at this point in time, we are buying at very inflated prices. There's less room for arbitrage, and there's a higher degree of sophistication and consolidation within the industry. Well, now fast forward to mobile home parks are a relatively unconsolidated space, right? The big boys, the big institutions like Blackstone, BlackRock, they haven't moved in full force. There's still a large mom and pop contingency of ownership in mobile home parks in America. Now, what happens if you are a savvy buyer, which a lot of our partners, our operating partners that we partner with at Walk of Wealth, so that we can get into these mobile home park deals and really capitalize. Now, we leverage their expertise, the teams that they've built, right? Because there's guys that are ready to go in and they specialize only in mobile home parks. So now what they can do is and this is just an example of one of our partners, they look for mobile home parks that are only 50 to 70% occupied. Why? Because now they're getting stuff that only has half the potential income. And you can go in and buy at expanded cap rates. You can buy at 9 caps, 10 cap rates. This automatically sets you up for large positive cash flow. But now imagine that you go and buy something that's 50 to 70% occupied, but you go in well capitalized and you have the funds to make these renovations. So you go in right away and you have an extreme track record. You have a team in place for construction. And as soon as you buy the property, you go in and start fixing the common area, start cleaning up the place. You start the vacant homes that are run down, that have just been left vacant, you renovate them, get them ready for the next tenant. And you can either move them in by renting it to them, or you can sell them the home and bring in additional revenue. Now all of a sudden they're paying you rent, and where you were getting $0, now you're starting to get $700 a month. And then you build 35 new mobile home parks, right? So now you're getting, where there was $0 revenue, now you're getting 35 times $700 of income there. You take a property that was only 50% occupied, you fix it, you bring it to 100% occupied or 95% occupied. And all of a sudden, this thing is spitting out tons of cash flow. On top of that, because it's a great operator that's now built these efficiencies of scale, they've brought the expense ratios way down. And they also own 14 or 15 other parks in that MSA. This gives them efficiencies and economies of scale. Also, what it allows you to do is lump together 15 or 20 or 50 or 100 mobile home parks, and now you can sell it to private equity, to these hedge funds, to these private equity companies, to these pension funds. And now you can sell it at a much compressed cap rate compared to what you buy. Remember, you're buying at a 9 and 10 cap rates on underperforming properties. You get these properties performing and then you sell them at 6 caps. And especially if we're headed to times where interest rates are potentially going to start coming down, as the Fed has signaled, then this is the time where fortunes can be made. And that's why I'm very excited about mobile home park space, especially when we have the ability to buy right. And then you combine in all of the natural tailwinds that we have that's helping push us, propel us forward. And it creates an environment where dentists/investors can make a fortune passively, as well as enormous cash flows and enormous tax advantages. All right, guys, that's it for this video. Mobile home park investing, perfect for doctors, right congruent with our strategy of passive investment. If you want to learn more about investing in mobile home parks, go down into the link below, click on the website, schedule a call with me. We're happy to share with you what our current and latest offerings are. All right, guys, until next time, keep the bank accounts growing, keep the knowledge flowing, and we'll see you next time. Boom!